Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. I'd like to offer you some foreign exchange charts today, and the first one I'd like to look at is the euro against the dollar. If we look at this chart, we can see a second consecutive indecisive doji cross yesterday as the market continues to be caught on a closing basis in the previously highlighted congestion combination made up of the flatlining short medium moving average currently at 121.55, the key March 2018 low at 121.52. Now, superficially, that might be what is going on. However, I still suspect the neckline of the possible reverse head and shoulders formation, currently at 121.63, constructed over this year so far, may have a significant impact as well. Beyond this, on the upside, we have the next overhead resistance at the April 2018 low at 22.12. Overall, there's a lot going on here. The descending wedge pattern is still live with a potential upside target X in the 123.40 area. But we also might have a preliminary target X2 in the 122.95 area for the prospective reverse head and shoulders pattern, though this is by no means certain as yet. So far today, a really interesting break higher over the neckline and moving up to test the resistance at 122.12. The next chart to look at is cable, aka sterling against the US dollar. A fifth bullish white soldier yesterday and continued follow-on higher from the recent bullish engulfing pattern. We have now another new high and high close not seen since April 2018. Ultimately, this has all been a follow-on higher from the break upwards last week over the dynamic capping resistance, which is now support, of the middle time, currently 138.92, of the important late June to late September 2020 bullish shift pitchfork. This pitchfork that has shown the bullish angle of attack since November last year. Meanwhile, overhead, we have limited strands of resistance, perhaps the March 2018 high at 142.43 and the April 2018 high at 143.83, the most significant nearby. So far today, nothing, holding steady around yesterday's close. The next chart to look at is euro against sterling. A possible bull hammer yesterday as the market dropped down almost all the way to potential target X2 for the head and shoulders top in the 85.15 area before running back up again. We still have targets X2 and X1, the target for the recent sideways triangle. They are both still live, though the seemingly impressive possible bull hammer action may signal an end to this. Let's wait and see. So far today, a further pull back up, looking right now as if we may have a bullish engulfing pattern in the offing. The next chart to look at is the US dollar against the Indian rupee. An indecisive doji cross yesterday seems the proximity and eroding effects of support at and below the market from the September 2019 high at 72.41, the November 2019 high at 72.24, the January 2020 high at 72.13, and the February 2020 high at 72.05 have all started to impact the recent bearish incentive and caused to have some second thoughts. So far today, a pullback up over the September 2019 high, but not really approaching the overhead descending resistances of the short moving average currently at 72.69 and the early November 2020 to date downtrend currently at 72.81. The final chart to look at is US dollar against the Brazilian real. A third bearish black crow yesterday, and we're back down into the maelstrom of questionable support consisting of the recent 50% Fibonacci line at 540.85, the 50% Fibonacci line, the May to June move at 539.29, plus the medium moving average currently at 537.52, and the long moving average currently at 536.26. You can add to that now the mid-January today uptrend currently at 538.31 that makes up the possible 2021 ascending triangle pattern I've spoken about in recent days. Just in case, the top side of this is made up from the combination of the January 2021 high at 551.59, the mid-November 2020 high at 552.57, and the lesser Fibonacci level at 552.91. It is too early to start naming any potential targets topside or below, but keep an eye on that idea. So in the meantime, good trading and stay safe in the markets and in real life.